Welcome back. Well, it is definitely positive for the markets. It's a rub-off from the Fed minutes and what took place in Asia, and that's probably seeping into the Indian markets at this point. So we have the Bank Nifty, and the momentum in terms of the financials, in fact, continues. The Bank Nifty is, in fact, just about at around 43,000. As you can see, it was sitting at a record close in yesterday's trading session, and it seems to probably be the star in today's trading session as well. Remember, it is expiry, so we will watch out for what takes place, especially in the second half. But let's talk about a couple of other companies. Steel Strip Wheels has entered into a memorandum of understanding with an Israel-based company, Redler Technologies, for developing, manufacturing and selling EV controllers. To discuss more on this, we have Mohan Joshi, the head corporate strategy and investments at the company, joining in now. Mr. Joshi, hi, welcome to the show. If you could just detail for us what this technology tie-up means, or the tie-up with Redler means, and how would it contribute to your P&L and by when?
Hi, thanks a lot for having me. So we announced that it is an MOU towards a joint venture of 51-49, where SSW will hold 51% and Redler Technologies will hold 49%. It is for designing and manufacturing of the EV controllers with IoT-based applications. And I think that going forward, as we see, this opportunity will scale up to the tune of $700 to $800 million opportunity in the next 3 to 5 years. And with the advanced technology access with Redler, we feel that we will have this first mover advantage in the country to completely localize it and offer these offerings to all the EV-based OEMs, which are trying to run for transformation from the typical fossil fuel-based vehicles to EV segment.
All right, and how big do you think this opportunity can be for you? Because, this is a new category that you've entered. You've been talking about, this partnership for a while. We've spoken to you about, you looking for a partner and all of that. You said it'll happen soon. Now that it has happened, can you tell us the potential business opportunity here for you in terms of annual additional revenues?
I think the industry size can be between $600 to $700 million in next coming 3 years, with the pace of transformation which is underway right now. And as we speak, that we are fairly confident that we are going to be grabbing a minimum of 25% market share, and targeting that this 25% will continue to move up towards become the largest player in the industry. As I said, that we are the first one to get this homegrown, best-in-class IoT-based controller, and we'll have a fair bit of first mover advantage in this segment. And also to add this, that this product is a PLI-based product, and we feel that we are fairly confident that in the next financial year, you will see the mass production coming in. And the first year will always be, in terms of testing and trial and, giving sampling and demos. And 23-24 year will be the year of changing and stopping the imports to the tune of maximum possible capability of SSWL, and offer the benefits of this product to all the OEMs which are present in the country.
Okay, so what do you think this would eventually do to your margins, considering that your cost of manufacturing would probably reduce?
So what I feel that this is a technical product. It's a very technology-driven product. So we feel that the margins are in double digits, and given that it's scalable, and I think it'll also need a very less amount of capex. So we feel that going forward in next 2 to 3 years, when it becomes close to $100 million business or $150 million business, it will contribute accretively towards the EPS as well as to the margin profile of the company.
All right, let's talk about the other parts of your business. I remember you had scaled down your export guidance for this year to around 450 odd crores, this from 600 to 650 odd crores, given weakness in the global markets. Where does that stand now? I mean, what can we expect in the remainder of this year for your other businesses?
I think as we guided that for the full business, we are at close to 4,000 to 4,100 odd crores in terms of the top line. In terms of the EBITDA levels, I think we've clearly stated 450 crores plus with a 5% upside guidance on the EBITDA. And as we speak, export market still remains subdued. And we are fairly confident that this nature of subdued demand will take an uptick coming into the Q4 of this financial year. And next financial year will have exports of alloy as well as exports of steel wheels back to the vengeance. And we are fairly confident that we'll achieve the financial year 21-22 export numbers in financial year 23-24.
Quickly, just on the export figure, I think your earlier guidance was 600 to 650 crores in FY23. Are you in line to achieve that, or do you think that it could probably be lower?
So I think with the last conversation that we did, we already, downgraded that number to the tune of 450 odd crores from the 650 odd crores. And we also stated that in Q4, the revival will start. And we also are confirming that, this number will go back to the numbers of financial year 21-22 in financial year 23-24.
Okay. All right. We're going to leave it on that note. Mr. Joshi, thanks very much for joining in and speaking with us. So that's on that's on an MOU that they've signed with an Israeli company. The opportunity size is likely to be quite significant. Let's see if that comes through or not. The stock down around 0.7%. Need to take a break now. But up next, Pritesh Mehta of Yes Securities will join in with some trading strategies and the technical outlook on expiry day.